Hello again, welcome to Inheritance Tax Part 16. This is now again an exercise case, and well, why should we make it complicated? The best thing is we just talk about the case. So here it is. Hollywood is a famous actor from Hollywood, USA, who has also lived in Hollywood, USA. When she dies, she leaves the right to a monthly pension of €1,000 as a legacy for her faithful agent F.A. And F.A. is a German national, has been living in Hollywood for 10 years now, but has only given up her German residence in Munich, which was at last still used as a secondary residence from time to time 4 years ago. F.A. is 63 years old at the moment when the pension is inherited, or when she gets the pension as a legacy. And how high will be the German inheritance tax on that event, if the event is taxable at all? That's our question, or better, this is a question for you. Try to think about it. The best thing you could do now is stop the video here. Take some blank sheets of paper to take the Tax Act publication and try to sketch an own solution for the case, and then later go on with our small video here. Okay, then try to have a small break and then come back and compare your solution with mine. Okay. As you already know, the first thing which we have to think about is if there is a taxable event, and as what F.A. gets here is a legacy, she does not inherit because she does not get a fixed percentage of all what Hollywood has left behind, but she gets a clearly determined amount of property out of the whole, so that's a legacy. Our supposition is that will be in all probability an acquisition of on grounds of death, but we have to check this, and that is why we need the Tax Act slides. Well, as far as we can say, things are simple. We need the Inheritance Tax Act, and here it is. Let's click on it. Now we need the paragraph 1, and here it is. Subject to inheritance tax is acquisitions on ground of death. Now we have to check if a legacy is an acquisition on ground of death. That will be paragraph 3. So let's go there. Paragraph 3, you can't see it here exactly. Paragraph 3, sorry, that was a bit. Okay, 3.1 number 1, by inheritance, by legacy, or on grounds of a claim to a compulsory minimum legacy. So all that is acquisition on ground of death. That was what we needed, so we have our first line for our case solution. So F.A.'s claim to a pension of 1,000 per month is a legacy, and thereby an acquisition on grounds of death. Paragraph 3.1 number 1 German Inheritance Tax Act, so it is a taxable event. See paragraph 1.1 number 1 of the Erbschaftssteuergesetz. Now we have in the second step to determine the kind of tax liability, if there is any or not. Is it unlimited or limited? And for this we must remember that unlimited tax liability will always apply if at least one of the two persons is an inhabitant of the inland. But we naturally have to be sure. And so we will have to have a look in the Tax Act. Here is it. You have already seen it during the solution of the previous 2 exercise cases. the tax liability covers, number one, the complete property transfer. That means the worldwide transfer of property in all cases of number 1 to 3, if the deceased, the donor, or the acquirer is an inhabitant of the inland. So we know what we have to check. And now inhabitants of the inland are all those persons who either have the residence in the inland at the moment of death. That's not the case in case of Hollywood. That's not the case in case of FA. Or who are German citizens who have not yet been more than 5 years constantly abroad without a German residence. Now FA is a German resident, German national, has lived in Germany up to 4 years ago. So FA fulfills the conditions of letter B. So one of the people involved here, the acquirer, is an inhabitant of the inland. So unlimited tax liability applies. FA is a German citizen, has not yet been living for more than 5 years abroad without a German residence, without a residence in the inland. So still counts as an inhabitant of the inland. See paragraph 2(1), number 1, letter B. That leads to unlimited tax liability because the acquirer, FA, is an inhabitant of the inland. See paragraph 2(1), sentence 1, number 1, sentence 1 of the German Inheritance Tax Act, plain and simple. The next question is usually the question of the arisal of the tax. That is a question for paragraph 9, and so we have a glance into that. Okay, so the tax arises in cases of acquisition on account of death with the death of the deceased person, and now we do not see any condition or any exemption in the next pages which might be fulfilled. So yes, we can congratulate ourselves. This is evidently the arisal of the tax at the moment when Hollywood dies. So this is 9(1), number 1 of the German Erbschaftssteuergesetz at the moment of death of Hollywood. Number 4, the tax base. Let's say for A, well, what's the tax base? There first we need a kind of general introduction to find out what we have to do. And again, it's clear. Let's go to the text. Here we have again paragraph 10(1). The taxable amount is the enrichment of the acquirer, so everything which FA gets, as far as it is not tax-free, and it is everything according to sentence 2, which results from the total enrichment minus liabilities and so on. Yeah, so let's have a look. So the tax base is the enrichment of the acquirer as far as not tax-free. That is to be found out from 10(1), sentence 1 and 2 of the Inheritance Tax Act. So what kind of enrichments do we have here? The legacy consists of the pension, 10,000 per month, lifelong. How do we have to value that? Valuation according to, well, paragraph 12(1) of the Inheritance Tax Act. At the moment of death of Hollywood, paragraph 11. Now, what does paragraph 12 say on this? I think that's again worth a look into the Tax Act. Well, first we have to change over to, no, we can have a look to paragraph 12, which indeed confirms the valuation of everything which has to be taxed has to be made according to the first part of the Valuation Law Bewertungsgesetz if nothing else follows in paragraphs 2 to 7. You will not find deviating rules for pensions in the rest of paragraph 12. So let's hop over to the Bewertungsgesetz. Now, if I'm right, it's paragraph 14 which you need. The valuation for lifelong usage of things or lifelong enjoyment of services. The present value of lifelong use of assets has to be determined. So the present value is what counts. Has to be determined by multiplying the annual value with a multiplicator according to the sentences 2 to 4. So to put it into plain words, as people with common sense would put it, how you have what counts is the present value of all the future financial advantages which you will get from the pension. That has to be calculated, and well, how that has to be done is explained by sentences 2 to 4. Sentence 2. The multiplicators are to be determined according to the mortality table. So it's the life expectancy which counts of the Statistisches Bundesamt, that is the Federal Office for Statistics. And they have always to be applied from the 1st of January onwards, which follows after the publication by the Statistisches Bundesamt. So for 2021, there will be a publication probably in December 2020 or so. I don't know when it exactly happened, but then you get an official announcement for the following year, whenever it has to be done, that present value of a lifelong pension or similar things has to be valued. The multiplicators follow from the following table. Now, when you calculate present value, you also need to discount the future payments with an interest rate. And that interest rate is here fixed by law, because otherwise you would have endless debate about the appropriate discounting interest rate. So here it's fixed at 5.5%. This is given the present state of actual interest rates since the last 10 or 15 years. This is rather far from real world, but it's still the official legal interest rate for such purposes determined here, and that has not yet been changed, so it's binding. And well, it might make a difference if you get a payment in the middle of the year, at the beginning of the year, or at the end of the year. There are different ways. Depending on when you get the money, there will be a different discounting factor. And to make things simple, here it's said, we take an average between the assumption that you get the whole money at the beginning of the year and the assumption that you get everything on the 31st of December. And that is so what is then published. The Federal Ministry of Fiscal Affairs has then to calculate the table with these multiplicators, which are calculated according to the requirements of paragraph 14, and here you have them for 2021. That's the current year at the moment when I make this video. And we have somebody, FA 63 was she, and she was a she, wasn't it? Yeah. Then the the life expectancy for a woman is 22.8 years, and the present value factor is 13.170. So that is what we need to calculate the value of the pension. So has to be valued with present value and is to be calculated according to paragraph 14.1 of the Bewertungsgesetz. That means annual value of the pension, that's 12 times 1,000, that's 12,000. Multiplicator for a recipient who is a woman and 63 63 years old at the moment. That was 13.170. So present value of the pension is 13.170 times 12,000. And there, if we compute that, a figure comes out. $158,000. Sorry. And 40, not 40, not 50. So, okay. Well, that's it. And now let's think about free allowances and such stuff. So for B, by the way, funeral costs will not be deducted because funeral costs will be deducted from the inheritance of the heirs, and a person who gets a legacy does not inherit and is not responsible for the funeral, so that doesn't play a role here. Okay, so we have to deduct the general free allowance. For this, we must know the tax clause of FA. The former faithful agent of a famous actor is in all probability not related at all. So we will in all probability end up with tax clause. Oh, I do not know. We should look it up, ladies and gentlemen. Well, let's look for our faithful agent of the actor. Tax class 1 is closest family members, husband, wife, life partner, children, stepchildren, descendants of children and stepchildren, so grandchildren, great-grandchildren, great-great-great-great-great-grandchildren, parents and ancestors in case of grounds of death, parent and ancestors if children still are alive, brothers and sisters, nephews and nieces, step-parents, children-in-law, parents-in-law, divorced husband, divorced wife, or divorced life partner, or as cynic people would say, all of them together. And then that's not our fiscal agent, our faithful agent here. So tax clause 3 is correct, all other acquirers. So we have a case for tax clause 3. Then we can directly look up the general allowance, which might come into play. That would be 16. And 16 tells us, all other persons in tax clause 3, 20,000. Good. So let's just have a look again. Okay, so we have tax clause 3C, paragraph 15.1, tax clause 3, We have a free allowance of 20,000 C per 16. What was it? 1, number 7 of the Inheritance Tax Act. So we have a new subtotal, or new subtotal for the enrichment that is now 138,040, and this will be now rounded down to even 100 C, and we look that up again, ladies and gentlemen. You see it here again in the bold type, relatively at the end of the paragraph, 10.1, sentence 6. The taxable amount is to be rounded down to full 100 euro. So we can memorize this, and we might even do some slight bit more and think about which tax rate will apply. For this we need paragraph 19. Paragraph 19, where are you? 19.1, okay. Tax clause number 3, up to 300,000, that would be the right bracket, 30%. Okay, so there we are, 30% on the remaining amount of the present value of our pension. See part 10.1, sentence 6. So we have 138,000 euro taxable amount. Tax rate is according to 19.1. What was it? 30% of that. That is that's a figure, ladies and gentlemen. And it's 41,400. Now, let us look to the 19.3 test. You remember that probably. If not, it's the best thing to look it up. Here you have it again. The difference between the tax which results from paragraph 1 and that tax which would be payable if the acquisition did not exceed the last threshold is only levied as so far as it can be paid out of 50% if the tax rate is up to, including 30%. So that's what we can calculate here still. And the last threshold was 75,000, but I can promise you there will nothing come out, because here it's in both cases 30%. The tax rate does not really leap up, so a 19.3 test is not necessary. There is not the drastic increase which normally is combined or connected with the threshold, because before and afterwards we have the same rate. So 19.3 test will here come off without any reasonable result. However, I'm nevertheless going to compute it. Why? First, you might not believe me. And second, imagine this were an exam. Then it might be that you had done something wrong, and just by chance the 19.3 test makes no sense. But imagine you had made a mistake with the tax clause, then everything would be completely different, and so for reasons of safety, to be on the safe side, one could deliver it. 75,000 times 30%, that's a challenging 22,500. Distance to the last threshold. Well, what was the amount of our pension claim? 138,000, at least of our taxable pension claim. So the distance to the last threshold is 63,000. Half of it is 31,500. So maximum for the tax is therefore 25,000. So so that would be 53,000, 54,000, I believe. And what did we calculate under the tariff? 41,400. The tax under the tariff, 41,400, is lower, so it remains valid. Tax is 41,400. Now, you might remember that there were peculiarities, that there was a special rule for inheritance tax debts relating to a pension right or similar advantages. That was somewhere at the end of the Tax Act in the region of 2024, 23, 25. So we will have to look for it in order to get up to date what we are allowed or expected to do there. And here it is. Taxes which are to be paid on the present value of pension payments or other regular payments or services may, according to the choice of the acquirer, be either paid on the present value, so cash and now, or annually at the beginning of the year on the annual value of the revenue. The tax is then to be levied according to the tax rate which is applicable for the whole acquisition, so in our case 30%. That means our acquirer FA has a choice: either pay 41,400 cash now, or pay 30% of all the payments which are going to come year after year at the beginning of a year. And then the first payments remain tax-free until the free allowance of 20,000 is used up. Under paragraph 23(1) of the German Inheritance Tax Act, FA has a choice between paying the 41,000 at once in a single amount, or paying 30% of the annual pension amount, so 12,000 times 3,600 per year. And in that second alternative, the first payments will remain tax-free until the free allowance of 20,000 will be used up. Now, one might also say other tolerated alternative, calculate the tax rate as the relation, the ratio between 41,400 and the 158,000. That would be 41,400. That would be 26.22. But that is rather more complicated, and then the free allowance would be stretched, let's call it this way, all over FA's expected lifetime. So only for people who are really in good health. Otherwise, it would be probably preferable to first collect the first payments free of tax, then perhaps die and be happy, or collect the first installments free and then later pay the regular tax rate of 30%. Well, so that was again a small case. Also, that is now solved completely. The important thing is there was not a limited tax liability, but an unlimited one. A last question, what would change if FA had been abroad already for 8 years? And then the answer is, well, then both would have been no inhabitants of the inland. Then we would have had limited tax liability, and then in all probability, because then no connection to the inland would have existed, there would have been no tax claim at all. So here you see what difference it can make if the 5 years period after leaving the country has already expired or not. Good. Thanks for watching. Enjoy the rest of your day. Try to get familiar with the way how such cases are solved, and come back to the channel as soon as you can. Thanks and goodbye.